Session is on. It is being recorded. This is Frank, Clueless A Trading. Tonight is a absolutely gorgeous New York City evening on the shores of the New Jersey waterfront across from the city. July 19, 2017, approximately 8:27 p.m. Eastern Standard Time. Session will be recorded and uploaded to the YouTube channel for the viewing pleasure of all other members who cannot make it tonight. Full disclosure, this is purely for financial education and not for any solicitation or advice. So, topic. The topic tonight will be giving you an overview of what the heck is going on with the markets, which are on a triple breakout. I'm not talking triple top, but triple index breakout on the Dow Jones Industrial Average, the Russell 2000, which is made in the USA, right? That's what it is, US small cap growth. The NASDAQ 100, which has been on a tear. And on top of that, we have the biotech index, which is starting to break out. Not broken out totally, but starting to break out. There we go. 4 of the major components of what makes America great. Smart brains, great technology, and you know what my thoughts are. Got to be educated, got to be smart. Can't just scream and shout when the rest of the nations out there are outperforming us in certain ways. We got to compete. We got to win. That's it. You don't do that by screaming and shouting and giving speeches. You do that by learning, by educating yourself, learning the skills, and moving on. Same thing with trading. So, on that note, let us begin. So I'm going to give you a quick overview of what's going on, try to show some charts. I can't, all my stuff is posted, online on the Twitter feed. And again, it's a very simple reminder, which some people, I shouldn't say a lot, but some people don't really bother listening to. If you really focus, and it doesn't take much because you all are smart people, on just reviewing what I put out there on my real-time Twitter feed, I wouldn't even have to do these webinars or anything. It's all there. It's all there. My real-time Twitter feed here, okay, is a running commentary on what is going on with the stock markets. So I'm going to go over a couple of logistical stuff tonight, which are those simple things in life, the details. And engineers and people who are in the craft profession know very well that the devil is not in the details. The details are the product that you create. Same thing with trading. So I'm going to go over some very simple suggestions, which I've always done, on how you can see what I see. And believe me when I tell you, and I say with all humility, that a lot of you will see a lot more if you just focus a little harder on what is going on, and most importantly, what is about to happen. But you have to have the logistical tools in order to do that. So this running commentary on the markets, not just alerts, but comments on the market, okay? And these very precision stuff that is put out there in multiple platforms, it is so critical that you look at them. I don't know if people know, but on your own Twitter feed, you can actually go under the settings section. I mean, the settings right here. okay, and go under settings and put in your mobile phone number so that you get notified on every single post that I'm putting out there on the real-time Twitter feed because you are connected to it. Does everyone know that? Yes, no? Need some responses, please? Andy, Dan, Mike, Sue, K-Bot.
I received them.
Okay. Some other people, please. Okay, somebody said I know it now. That's good. Glad that you know, Mike. Yep. So you got to do that. So this way, it doesn't matter if you are actively trading, which is very important. If you're in front of a actual laptop or a desktop, but I have tons of members who are actively trading who are invisible because we have roughly between 150 to 200 members. They're all receiving alerts, but most of them are completely invisible because they're busy during the daytime, doing well. They're continuing with the service. They're not DMing or direct messaging me on Twitter saying, "Oh my God, what the heck are you posting? You make no sense." Yeah, I've got a couple of those. That's funny. I'm not perfect, but boy, I'm showing the direction of the market better than anybody out there. Anyway, so this is a running commentary on what is going on with our individual stocks and what is going on, most importantly, in the overall in the markets, and more importantly, more predictive stuff such as this, where it's a macro multi-year breakout in progress. Read what I write in English. It's a multi-year breakout in progress. That's like big stuff. All right. I'm not going to water down the language to make myself sound like really stupid so that everyone else can understand. But a multi-year breakout in progress with all the lines drawn, it's pretty goddamn clear what's going on. Now, it doesn't mean there's not going to be volatility. And if things do turn the other way, okay, and all of a sudden we take a nosedive, I'm not going to be sitting there calling this a multi-year breakout as we are attempting the breakout on a perfect ascending wedge or even ascending triangle if you want to look at it that way. And if it goes like this, I'm not going to be like, oh yeah, that's a multi-year breakout. No, no, no. You know that. It's not going to happen. You guys will all be alerted, as I do, intraday, intra-week, because I'm not here to hurt people. I'm here to help people and help myself, which I certainly do very well on my own, with no help from the government and with no help from any other trading service. Just my brains and my experience and my eyes. So, bottom line is that it's not that hard. I have a big fat yellow arrow here. Let me spend a minute on this chart. Big fat yellow here. This was the one which was not annotated. I'm just showing you the chart. The Twitter feed had comments on it, as you all know. And this is a breakout. And that breakout could be pretty substantial. Eventually, it's going to land up somewhere north of 1,500. But for now, it's still attempting a strong breakout. And that attempt alone, today, overnight, from yesterday, on the RUT 1420, 1430, 1435, and 1440 calls, this is the way it goes. The 1430 calls were up 200+%. The 1435 calls were up 193%. And the 1440 calls, which we initiated because we roll over into the higher strikes, was up 301%. I need to say no more. And this is just from overnight, like from yesterday. Forget about when I alerted people to buy them on the Russell 2000, 100 points lower at around 1339, 1340. But more importantly, at this level, which is more like around 1400, we are up 41, 42 points from that. That's a lot on the options. So you can sit there and say, oh, I'm happy with my 20% or my 30%. That's fine with me. You can always scalp those. But when you see a big trend developing, which we're going to talk about tonight, you got to do what you need to do, which is stick with the swing trade. So to make a long story short, this real-time Twitter feed is gold. I'm not making things up. I'm not flashing my money. Once in a while, I mention a couple of trades that I do, but that's not a habit of mine. Okay? You might have been with services where the guy is showing his Lamborghini around. Well, I can possibly buy him out more than he can imagine. Okay? We're here to make money. We're not socialists. We're pure capitalists across the board. Some people are making $300. I hope nobody's making $30, in which case that's all commissions. Some people are making 3,000, and some people are making 30,000. So there's no reason to show off. It's a percentage return that counts. That's what builds your confidence. So going all the way through multiple powerful trades, showed this, which was amazing. Okay, real stuff, real trades, not like fake trades, right? The high 830, the low 170. Did I catch 170? No, it was more like around 2.5. You guys know that. That was a CMG 375 calls, which closed yesterday at 530, opened at 330 because Chipotle was down, went down to $1.70. I saw the double bottom reversal hammer. Alerted by the time you get in, because these things move fast. It's probably around like $2.5, $3. They went to $8.30. Need I say more? And that's just one of them. So then I showed this, which if you're an ACS Advanced Coaching Session student, you will be taught, and the ones who have been with me for a while on the coaching session stuff know very well what this is. This is telling you what's going to happen. It's really telling you what's going to happen over the next 2 to 3 weeks. This is a weekly, not a daily, not an hour chart. It's called the SPX 533. Very simple. You cannot replicate it. You can try all the parameters and try to fidget around with it. You cannot replicate this chart. I'm telling you right now. Okay? So, some big stuff going on. Not just in the markets, but in the service. It's how you react to it, how you deal with it, how you understand it, what your risk level is, what you do with it is really what counts. Okay, let me get this out. So this is a clear, just want to make a point, a very strong point, that this real-time Twitter feed is serious business. So if you're not monitoring it, if you're not spending the time and energy understanding it, listening to my YouTube videos that are available for absolute new members also on the YouTube channel, not signing up for the ACS coaching sessions, which are damn cheap if you ask me. Like I like to repeat, one of our new members, he told me, he took a $24,000 online trading academy training to learn trading. I mean, 24,000 for a couple of $100, you learn more than 24,000 will teach you. That's my only real marketing pitch, and it's a fact because I laugh about it. Somebody said, "Why the heck do you charge so low?" I said, "Because I'm not making money off my service and my coaching classes. My real money is coming from my own trading book, and thank God for that every single day. If I have to rely on all of you guys for my living, I'd be dead meat." I think no other service will tell you that, but that's okay. So anyway, so this real-time Twitter feed, Clueless 8 RT, is the cat's meow, as I like to say it, right? I don't know where the hell that term came from, but this is serious stuff. If you understand this chart and the messaging that I'm trying to put through, not just what I write, because I write in plain English, not like an abbreviation and stuff, which I need to start doing because my hands are like, my fingers are starting to drop off when I'm typing all this stuff. Upper Bollinger, I'll probably put UB. Slow stochastics, I'm probably going to go SSOC. And I'll put all those terms in the dictionary on the website. You guys can go and check it so that you know what you're looking at. Of course, you can always ask in the chat room too. But I need to shorten them down because typing all these long words in the middle of my busy trading day, trading my own book, sharing stuff with you guys, gets very, very tiring. Okay? Add instead of saying buy to open, which is BTO. I like saying add. Somebody said, what does add mean? I was just like shocked. I felt like saying, do you know how to read? Add means to add. But that's okay. So, as you can clearly see, this is very, very, not just very important, it's critical. Now, logistic-wise, let me start off there. These are the things you guys need to do. And I'm just doing this to help you guys. Whether you do it or not is not my concern. So, first of all, you got to, when you have time or when you have availability, you got to look at these on larger screens. Just like I'm looking on my 24-inch screen. It's clear as daylight what I'm looking at. These are perfection, unbelievable chart structures that I draw for you guys and for myself. It gives me a roadmap to what I am doing. So I don't freak out just by looking at the prices like many of you do. I'm not blaming you guys. That's what you're used to. If you're used to eating garbage food all the time, you don't know what good food is. And good food doesn't mean lambs, good food doesn't mean that you are eating a $900 meal in a Manhattan restaurant. Good food is fresh, organic, farm grown, good stuff that your body likes. Okay? So this is what it is. So when you look at a larger screen, you're going to love it. You look at a teeny weeny little thing, an Android phone, which I hate Android phones to start with. Okay? Or on a BlackBerry, which I use for many, many years. I have every single model of the BlackBerry. Gotta use an iPhone. If you haven't migrated to the iPhone, then you're living in the dark ages. If you're using a Samsung, then move to Korea. I'm serious. Garbage. Gotta use an iPhone. Get into the Apple universe. All the apps are there. Everything is there. Does Samsung create apps for all the stuff that we do? No. Dump all that stuff. I'm telling you straight out. Get an Apple. Stay in America. Stop funding the Koreans. And I have a lot of good Korean friends, but I'm talking from a business level. Stop making Korean billionaires every 2 months. Create a couple of American billionaires every couple of months. All right? Seriously. So look at this chart. To me, it's clear as daylight. How it gets there? It's just a matter of getting there. How it gets there is based on my charts. Will there be volatility? Will it be up 4, down 2? Absolutely. Will it get here? Yes, I think it will. And I believe that it will. Now, why do I say this with so much confidence? Because I've done it so many times. That's all. Whether you believe it or not at the onset of a trade is not my concern. You being amazed and saying, oh, wow, amazing trade, without you being in it is my concern. That just shows you didn't make the money, but the ones who followed me and stuck with it made a crap load of money. Happens every day, happens every week at Clueless 8 Trading. Congratulating somebody else, remember that, on a trade doesn't do anything to you. Being selfish about your profession, about trading, about your making money is far more important than spending the time congratulating me, which please don't do, because I don't need it. Congratulating somebody else is completely fine. How about congratulating yourself with a fat 200 plus percent type of winners that we produce almost every other day, including today? Now, if that doesn't go through your head, you need to see a shrink, or have your wife talk to you, or your boyfriend talk to you, or a girlfriend, or whoever it is. That's serious. Congratulate yourself in life. Stop looking at other people's successes. Okay? So, all right. So that's the Twitter feed is, I made my point, is so critical, it's not even funny. The larger the screen that you look at, the better off you will be, period. So a couple of other logistics. And I mentioned this several times, but I'll say it again because it's important. You have to use a platform, and this one is totally free, right? Investing.com is totally free. So no one has an excuse. That mimics my charts that I'm putting across. How you structure the charts is never, at this point, going to be as good as mine. It won't. I mean, if you can show it as good as mine, I will accept you with open arms, and I'm going to say, listen, if you're getting a full year's free worth of the subscription fees, all waived, because I'm going to hire you and pay you to draw my charts, which I do every single day with a lot of hard work, a lot of effort, a lot of passion, and a lot of accuracy. So if anyone can come close to drawing these charts the way I do it, with giving me a reason why they're doing those charts like that, I offer you complete free for for a long time, at least a year. All right, use it as a challenge, because I need people. Trust me, I need people. I am not short of brain power. I'm short of manpower or woman power. I need people who can basically be my sort of clueless A junior, and I'll pay them. Of course, I'll pay them for their effort and the work. So if anyone's willing to step and say, hey, listen, I'll do it, I'm going to match it, I'm more than willing to listen to all of you guys. Any of you guys. Okay. So bottom line is I use investing.com. You can see that. That's the Russell 2000 futures. This is a beautiful chart. Every single point has been met, going to be met, is being met, and every single candle all the way from the previous highs that was back on June 19th, right? Down here, look at the date, June 19th, approximately in the afternoon, around 3 p.m. Or so. I don't know how accurate investing.com is with the times, but anyway, June 19th, 2017, just a month ago. And I've gone through this in the previous ACS, but then the big breakout that happened on Friday, which we were in, which was July 14th. Then the consolidation channel, which was there. I don't know why it disappeared. The trading band, as I like to call it, and you guys know that very well from my Twitter feed, from even this morning's. So here's your trading band. Let's fill this baby. Let's actually make this red for fun, or light red. Hold on. Why is it not turning red? Okay, kind of red. And let's put this in the green. Perfect. And the trading band, which I showed this morning, if we have a breakout over that, was between 2450, 2460, and then it just broke out. Those 2450 calls, which I don't own because I moved the strikes up, that I told people to buy at around $2.20, which was only what, 3 days ago, right? The 2450s, which we moved out to higher strike prices. Can somebody guess where they went to from this Friday and Monday? Just please take a guess. These are the July 21st 2450 calls. The average cost, which meant as some of you were in, was approximately was approximately $2.20 to $2.60 at the close on Friday. Friday, just a couple of days ago, not like 9 months ago. Okay, where did they land up today? And probably will go higher by Friday. Can somebody take a guess, please? This is a Dan said 24. Andy? Andy? Andy, are you there? Or are you awake?
Hey Frank, I'm here
Okay, so I asked you a question, so please answer.
at 24.
Okay. Sue? Okay. K-Bot, can you hear me? K-Bot normally answers pretty fast. Okay. So yeah, they went to the high of the day was 24. If you guys looked up or not, that's fine. But still, it went from 2020 260, let's call it 3 for the sake of calculation. Okay? To 24. Now, I do have members who still haven't sold their whole bunch. And I don't mean like deep pocketed members who bought like 30 calls or 40 calls and stuff like that. I'm talking people who bought like 5, 6, and they're still running with it. So they put at $3, they put $1,500, right? $1,500. And where is it now? They bought 5 calls, roughly. 5 calls. And where is it now? Can somebody give me a quick answer? Okay. Right around here, it was $2. I mean, I'll make it $3. And this is not the first time it's happened on my server. It's happened a lot. Happens almost every other day. $3, and they're at 24. So on a percentage basis, how much is it? What is your profit? Quick, guys. You're supposed to be, on a percentage basis, what is it? That's correct. It's 700%. Okay? It's 700% in a matter of days. And you put in you bought 5 calls at 3. And I have to show these things because if there's any other service, they'd be putting this stuff up right when you walk into the website. So you're like hit with the wall, like, wow, this guy's doing all this stuff. Well, we're doing it almost every week. Not every day, but every week. So 1,500 calls at 3. I'm sorry, 5 calls at 3, $1,500. So at 24, what is it? At 24, where are we? Come on, guys. You guys are options traders. You should know it. Andy, Dan, Mike, Sue. Uh, you guys can hear me, or you just purposely stay quiet? I'm just curious because I'm spending a lot of time like trying to really help people out here. Is it just like you don't like my voice, or what's going on? Okay, you guys maybe don't have the mic or headset. So yes, it's $12,000. So $1,500 goes to 12,000. So let's say, for example, which is kind of a fact with real traders, I mean normal traders, you don't hold from 1,500 to 12,000. You took profits along the way. So how about 1,500 goes to 6,000, half of the 12 grand? Because it is always good to take profits along the way because there is volatility. What a phenomenal trade on one trade. On one trade. So what does it require to do trades like that in many trades that are presented in front of you guys? This is what it requires. It requires your understanding. Limited or not, you require some sort of understanding of what the heck is going on with the markets. It requires, and please write them down if you'd like. It requires your understanding of tactical charts. Number two, it requires your own conviction, which only comes from understanding tactical charts. It requires that you are not another MOHTR. That's called monkey on a hot tin roof. You think I kid around? Most traders, even a lot of them in our group, are basically just price watchers. If you're a price watcher, you will never, ever do this because you're watching every single red candle. You're not buying those reversal hammers. You're freaking out just because one little red candle comes out. Let me just zoom in. Okay? Because a little red candle comes out here, right? Couple of red candles, like, oh my God, this is it. We're going to crash. And even if you think like that, but oh, I'm going to lose all my money. Little stuff here. My charts are clearly showing the upside is intact. You don't believe me? Go frigging look at every single comment that I put out there over the past couple of days and still saying that the market has upside to go. So it requires some sort of, not bravery, stupidity, but intelligent courage based on my tactical charts. I can't teach you that. You got to figure out how you're going to do it. Because swinging a powerful trade, whether it be Chipotle, whether it be the S&P 500, whether it be the Russell 2000, IWM, that's where the big money's made. The big money is not made, oh, I just made 30% and I ran away like a little, dog or a stray dog. A stray dog when wild dog, like, you see sometimes in the suburbs and stuff, like, they get the headlights, boom, they're gone. Well, don't be a stray dog. No offense meant to anybody. Everybody's a sheep till they realize what they're made of. Okay? And when they realize, like, wow, I really have potential. I really understand what these charts you're putting through. That's when you become a lion. Well, it's high time that you move from there. But you cannot become a sheep to a lion making 30% instead of 200%. Okay? And a sheep basically makes nothing because they're sitting on the sidelines, always scared, listening to CNBC or whatever they're listening to. By on its own. It's never going to happen on its own. It will only happen if you force yourself to understand all these tactical charts, the technicals, the understanding of the markets, which will take you years. Believe me. I'm not making, light of that. I'm not expecting you guys to understand every, what the gut feeling that I have about the market. Some of you have a better gut feeling than me, if you ask me. But when it comes to actual tactical gut feeling, none of you are better than me yet. And some of you are close. And I'm very happy to see that. Okay? So that's it. So you can be a sheep. This is actually not sheep. This is like a sheep with a couple of horns. Okay, a ram. How about that? Okay, to a lion just by saying, oh man, I could have done that, should have done that, hold it, could have done this, that, and like freaking out on every single little red candle that comes along the way. You can't do that. That's all. The third, a couple of other things. We are right now in the midst of and these are very important things that I'm telling you guys, because this is what is discussed on the upper echelons on the 50th floor of the Goldman Sachs building that's in the New World Financial Center right now. Okay, before it used to be on Broad Street, a couple of blocks, 2 blocks down from my old office. That's where the New York Stock Exchange is. Okay, so the serious stuff that's going on is that the market doesn't give a crap about whether healthcare reform is going to get done, whether tax reform is going to get done, blah, blah, blah. Look, I'm a hardcore Republican. I support Donald Trump in every single way other than when he's really stupid. When he gets stupid, and trust me, I know a lot of his lieutenants, all right? People who really work for him from my old Wall Street days. When he gets stupid, I say it, because you don't idolize anyone other than God. But when he's putting practical stuff on the ground, I'll be with him. And when he starts talking business, I'm all there. When he's talking trash, like a lot of us New Yorkers do, I ain't there. Okay? That's it. Whatever your political views are, I don't give a flying you know what. I'm just telling you straight out. I just believe in business. American business has made America great. Education has made America great. And that's all that matters. I don't care about color, creed, shape, size, whatever. It's your brains that matter. We are the ultimate brain drain in this country. We attract the best brains in the world. We've built some of the finest companies and the infrastructure in America. Okay? So, saying all that, the way I look at it, because I understand Wall Street doesn't give two hoots what Donald treats next. Whether he's going to stay president or not president, believe me, they don't. What they care about is what U.S. companies are doing. And U.S. companies in general are blowing the cover off the ball, whatever. Going for home runs on their earnings, on their global business. Because we are, whether we like it or not, the true leader in the world of this global world that we live in. We want to basically become an isolationist country. Every other one of those powers out there, India, Russia, China, are going to basically eat us alive. We don't want to be there. We don't want to be asking them, oh, could you give us a little bit of leeway so we can send? No. They have powerful militaries too. None to beat us, obviously. But we can't dominate the world by military force. We have to dominate the world by economic force. So Wall Street doesn't give a hoot. Telling you right now. So what does that mean? What that means is if the markets want to go higher, They shall go higher. Let me move this trend angle so that the lines are a little bit clear. They will go higher regardless whether we get tax reform, whether we get health reform, healthcare reform, which is a complete mess if you ask me. As a Republican, I'm appalled that after all these years, they don't even have a concrete plan that they could have put forward. They're acting like a bunch of spoiled babies, and rightfully so, because it's people's lives that matter, right? So bottom line is that it's the way it goes. So markets, and I'll tell you what the markets will do over the next couple of weeks and a month in a few minutes. Right now, based on these charts that you're looking at, this is your roadmap. I put a big thumb down here saying the market short term will hit a high of 2476. I have to raise this thumb and move on to the upper channel not because I'm like, oh, this is good, I'm really bullish. No, I'm not. I'm just looking at my charts. So looking at my charts here, based on this fantastic, this is all very mathematical. We are looking at the E-minis or the ES at around 2484. What does that come to in the S&P terms? Somebody tell me. What is that on S&P terms? And I'll show it to you guys on the Thinkorswim chart. But up here at roughly 2484 on the ES or the E-minis or the S&P futures, what does that translate into S&P? You guys should know that like the back of your hand, like you know your kid's name.
2 or 3 points higher. 3,
no,
I think.
No. It's 4 to 6 points higher. Roughly 4 to 5 points higher. Okay? It's not -4. It's +4. Okay? So Mike, by now you guys need to, it's just like saying, it's like you go to the supermarket, they want, your purchaser is $20 and you're like fiddling around with your cash. You're like, $20. And you give him $24. Come on, guys, wake up. Because these are the most important proxies that you need to use to make some real money. Look, there are enough guys making real money on my service. I want all of you to do it. Look at what Dan, who couldn't make it today, posted. The guy's just ramping. He's not smarter than you. He just knows basic counting. So again, and I've repeated this at least like probably 100 times. Okay, here's the conversion. 1 E-mini, you have to add roughly 4 or 5, let's call it 4, is your S&P. 1 S&P point equals, it doesn't equal, it times 6 is Dow Jones Industrial Average. Guys, just write this down somewhere because I'm going to be tired, especially with some of you guys who are like been listening to, come on. I mean, seriously, that's a little bit disappointing. It's really disappointing. Seriously, I have to say it. It's very disappointing. And you guys want to be options traders? I mean, come on. Be like a you make probably more money, like a commercial air conditioning mechanic or something. They make a lot of money. I mean, come on, wake up, okay? So when something moves 10 S&P points, which is pretty much what the market moves in a range, how many Dow points is that? How many Dow points is that? Somebody step up and just tell me, use your mic, post there. 10 S&P point move is how many Dow Jones point move? Please, 60. Well, that's what Mike said. What about the rest of you guys? Especially the new ones, like, By the way, newbie, who are you? What's your name? I always see newbie 23. Who's newbie 23? Could you just type in or mention? Can you identify yourself? Newbie, please identify, because otherwise I'm just going to kick you out right now. Oh, it's Rohan. How could I kick Rohan? He's, I love that kid. He's the best. Okay, I'm sorry, man. No problem, Rohan. Sorry. Yeah. Okay, that's great. So 10 S&P points is, up and down is basically 60 Dow points. That's the way I look at things, and it makes my life easier. Like, okay, Dow's down 100 points. That means we should be down like about 15 to 16 S&P points. Once you correlate these things, it makes life easier. It's not like, whoa, Dow's down 100 points, like the world's falling apart. No, it's only 16 S&P points, which is not very nice if you're on the long side, because individual stocks are down a lot, right? We've been there. We have capitalized on it, but we've been there. But this is the most important part, okay? So when right now, the market's closed at 24. The E-minis right now are at 24.70 in after hours. The market's closed at 24.74 on the S&P. So it's roughly, I don't want to get into the cash settlement side right now, okay? Mike knows a lot about that stuff, but I just want to keep it simple. So Mike mentioned that. You can guys read that in the post on the thing, on the GoToMeeting box. But basically, one S&P points, when you see me showing the E-mini charts, just in your head, that means roughly 4 or 5. Add 4 or 5 to the actual SPX that's trading in front of you. Okay, that's it. These things you should know. Write it down and just paste it somewhere so you know. Am I clear with everyone? Yes? And the conversion between the SPX and the Dow Jones Industrial Average. Are we okay with that for now? Yes?
Yes.
No? Okay, good. All right. So when you look at this thing here, nothing goes up in a straight line, right? I actually responded back to one of the biggest posters, and he's a very solid guy, owns his own company, Charles Biello. He that's his name, right? You know who he is on StockTwits? He posts all those fantastic statistics on the market and charts, not individual charts on stocks, but all the statistics on the market and individual stock returns. Do you guys know who I'm talking about? Yes, no? On StockTwits? So this is what I wrote to him, because he said he showed the VIX thing here. Okay? And he basically, in a nutshell, he mentioned the VIX, just like you hear in the media all the time. What do you always hear about the media when they talk about the VIX, which is the fear index, or the old-fashioned volatility index? Because now there's so many other ETFs like UVXY and so many other things that you can use to short the market or go the other way. What does it keep on saying about the VIX?
All-time lows.
Yes, that's all you hear.
25-year lows.
It's all-time lows. But more importantly, what else do they say? What does all-time low on the VIX really mean if we were 10 years behind us? Okay, what would that mean in psychological terms for investors?
There's no fear out there.
That's right, and which is so incorrect. There is so much fear out there. That frigging VIX is no longer relevant that much, to be honest with you, even though I show it, to real fear. Because so I asked this gentleman, who is a very accomplished gentleman, Charles Biello. Check him out. I follow him on StockTwits. So I asked him a simple question. Hope he doesn't get pissed off. I said, with all the intraday, intra-week sector volatility, because he said the VIX all-time lows, there is no fear. That amazes me. We're scared almost every day. Yes or no? Yes or no, guys? I know I am. With big trades, I'm scared all the time. But yes, that's great. We use the fear using the tactical charts. I mean this. This is a real motivational session. This is what I do to myself every day. because my bills are a lot larger than most people out there, believe me. And I don't have too much debt. I got to pay back a few loans, but aside from that, not much. There's a lot of fear. There's a lot of stress. Stocks are upside down. Amazon goes down like 30 points, like for no reason, because some hedge fund is blowing up and doing stupid things. Margin, institutional margin. So what are they talking about? The fact that there is no fear. That the market, oh no, he used the word the markets are peaceful. I felt like holy shit. Excuse me. The markets are peaceful? The markets are not peaceful. Because every single, and this is the biggest thing you'll ever learn from my service, is all the crap that you hear in the media is garbage. Okay? You don't get too happy. You don't get too sad. You try to stay in the middle and make as much money as possible while the opportunity gives you. It's that simple. And the only way you'll do it is by understanding, spending some time, maybe a few extra bucks, learning charts. Not your regular charts that you see out there, but these type of tactical charts that you're seeing, which I don't see anybody drawing out there. And I track a bunch of different services. And if you guys can show me somebody else who's drawing charts like this, I'd be more than happy to invite them over to have a webinar with me. Please, show me. It's not a challenge. I'm just saying I do want people who structure things like I do. That's okay. So they're telling me the market's peaceful. Yeah, great. All my great members here and people who are in my service, they're like, oh yeah, the market's great. That's why I bought things here and I didn't worry about anything because everything's so peaceful. And I just held it here. Things went from 3 to 24. Things would have gone from 50 cents to 24. But yeah, everything's so peaceful. All goddamn liars. They're not liars. They're just looking at things so simple. This is not peaceful. This is a raging bull market overall with massive fake outs and lots of patterns and stuff that I put across. This is peaceful. Now, I don't want to confront the guy too much because, he's a well-known guy. Not that it matters, man, trust me. So, but why would I piss him off? But I only wrote that's peaceful. All that volatility, sector volatility, biotechs completely, falling apart one day. Goldman Sachs, making us lose a whole bunch of money. Okay, we made it back in a lot of other trades, but that's peaceful. So I just want you guys to understand that there is nothing peaceful about the market. You always have to be alert. The only way that I do it, and I'm just sharing what I do. That's all. I'm not a guru. I'm not nothing. I'm just sharing what I do, which has proven to be a solid method, is to rely on my chart, look at the levels, try to be as balanced as possible. I could be upside down. I'd still make enough money back very fast. Just want to be clear on that. Okay. So we can look at the same. We can move on to this chart as I explained this because I know everyone likes moving pictures, but I'm just sort of explaining a lot of important things here. I could have actually done this session without charts. Is how does one adapt to that reality of trading these markets and not losing their head or their confidence, because that's exactly what it is. When you lose your confidence, it doesn't matter what trade you do, you're going to screw up. I'm telling you right now, okay? This is your S&P small cap futures. We got a lot of room to move here. It is very, very possible. And again, nothing moves in a straight line, right? We know that. This is a straight line. This is peaceful. The VIX sitting there at 979. Oh, everything's really peaceful. Do you understand my sarcasm? It is so full of garbage. It's not even funny. The VIX does not relate to the overall segmentation of the market and the way the algos run the market. Am I clear on that? The VIX looks at the broader market when it falls and all sectors fall. But when 3 sectors rise, okay, and we've seen that so many days. This is the reality of real markets. 3 sectors rise, and let's say 2 sectors are down. Let's say energy and biotechs are down, financials, industrials, and let's say utilities, whatever, are up. Industrials and techs are up. The VIX is not going to show you that. The VIX shows you when, like, let's say 10 sectors on the market are down together. That's when the VIX goes nuts. And it's happened a few days. And generally speaking, those create powerful tradable bottoms that you can trade off and make crap loads of money. So follow the VIX charts that I post. Follow it on your own when you can. But just want to make it very clear that the garbage that you hear out there is real garbage. Even from intelligent people. So that kind of got to me. Peaceful. I'm not at peace when I wake up in the morning. I'm ready to fight. I'm ready to help my members. So, saying all that, couple things that you guys all need to do. Number one, this myth, like, oh, I have a very small account, I can't really trade with that, is garbage. The bigger your account is, a $3,000 account with my alerts and the way I do things, and you don't have to lump it in one thing. If you want to, you can. Especially on those tactical bottoms where the double hammered, like this inverse hammer stuff that I put across. You think it's a joke? Your account could be at 10,000 by the end of the day or by the following day. Okay? Let's say a 48-hour trade. 3,000 goes to 10,000. You're no longer a small options account. I'm not asking people, why should I ask people? I'm just saying, anybody who's trading with, let's say, $500,000 in options, and if they're using all that $500,000 in options, they are out of their frigging mind. Why? Can somebody tell me? If somebody's trading with, let's say, hypothetically speaking, somebody, and I have members who are trading with very large sums in options. I trade pretty good sums, but I don't go that crazy. So, because I own stocks and stuff too, right? I mix it up. So somebody, let's say, is trading with $500,000 in options. What is the craziness about that? Please, somebody answer in simple English.
The volume, they can push it around too much.
What? What was that answer? I'm sorry, I didn't hear it. What?
They can affect the price if they try to do too much with a particular position.
Excuse my French, that's bullshit. The market is multi-trillion dollars. $500,000. You're telling me $500,000 coming into different individual stocks or whatever is going to affect it? No. If it's in a small stock, yeah, of course it will. No, that's not the answer. Okay? Somebody else come up with it. I really want to answer because I'm here to help you guys. So I need to know how you guys are thinking. So even if it's a wrong answer, doesn't matter. Hard to fill on some stocks. No. I want answers. No, I don't want real answers. I just want your thoughts. Andy, give me an answer if you're still online. If somebody's trading with $500,000 in options on a daily basis, what is the biggest, stupidest thing that is going to happen to them? Okay, RJ. Who's RJ? Is it Rohan again? Okay, so Andy left. He couldn't take it anymore. So Rohan, the reason I'm showing this numbers, somebody trading with a smaller account, okay, $3,000 or less, and somebody trading with a large account. What is the biggest danger on trading with a large account versus a small account? It's a very simple answer. But I need to rewire your guys' brains. What is the answer? Sue, can you tell me? K-Bot? It's such a simple answer. Large account will panic. Yeah, you're close, but you haven't given me the real answer. What does panic mean? She's close. Okay, so the ladies actually answer smarter than all of you guys together. But then I always knew women were smarter. As my wife. Okay, so yeah, they're gonna lose more money. That's really the simple answer, guys. So wake up and smell the coffee. I've been there. The larger my trades are. Look, I'm offering trades which are in the range of 200 to 400%, correct? That's not fake news. That's real news. Yes? No? Correct? Okay. So why the heck do you need to have $100,000 to do it? You can put 5, 10, go up a little bit more on some of the expensive options and make 2 to 400% on each trade. You're golden, man. You don't need to play the lottery. Your girlfriend, wife, husband, boyfriend, whatever partner will love you a heck of a lot more and not say, hey, what are you doing trading? You know, you're a loser, this and that. $500,000 if you put in all at once in the market in different trades, chances of you losing money are pretty big because generally speaking, and this is what I want to get to, what is the average fluctuation on high beta momentum stocks like Tesla, Google, Apple, Amazon, Netflix, SPX, RUT, Regeneron? What is the general movement of those options during a certain day when it's volatile? What is the percentage movement? This is real trade management. What is the percentage movement overall? You just don't buy and it just runs up. Yeah, in many cases it does. In the type when I alert the bottoms in a big way. But in general, they go like this. What are those fluctuations? What are the rough fluctuations on those percentage-wise? Okay, Mike gave you straight answers, never measured. I know them because I see it every day in my book. What is the general 1 to 3%? You must be smoking crack. 1 to 3% on options? Are you out of your mind, Rohan? It's a heck of a lot more. At least he tried. Do you guys really trade? Or are you just like another like fake news stuff going on? No, Mike, that's not the answer. I said the overall volatility, not the ROI returns that I produce. Okay? Overall volatility is roughly between 20 to 40% given within an hour or two of when you buy it. That's what options volatility is till it reaches the 2 to 300% or 400% that I deliver on a consistent basis. Does everyone understand that? If you don't understand that, I really would advise you not to trade options. Just buy my stocks. I need some answers. Okay, Dan says yes. Mike says yes, and I'll explain it in a second. Sue? Okay, I won't wait. Bottom line is, before we get to those levels, when we buy something, that is the general fluctuation that we normally get, especially on SPX, okay, and RUT. That's why we dollar cost average. And anybody of you who's not dollar cost averaging, I don't know what to say. You don't want a dollar cost average volatility? Okay, that's the reason why you cost average. If the market was going like this, why would I bother cost averaging? You cost average because it does this. A lot of those fantastic services out there, brilliant. Yeah, I say it with sarcasm. They say, "Oh, you should never buy the lows." No, you can't just buy. You can't buy something that's down. No, you can't do that. Garbage. You don't do that? Then how the heck do you trade this and go from here, from $4? I'm looking at the RUT calls. 16. You don't dollar cost average because you bought here, you sold a bunch here, you bought a little bit more here. No, the other services will tell you, oh, you bought here and it just went up in a beautiful straight line. Liars. And I want to highlight this point, not to make myself look like, oh, I'm a great guy. No, because the lies that you hear about trading and the way they teach you trading is so full of crap that it pisses the crap out of me. But what do I care? I know how the game works. That's what I'm trying to share with you. This is volatility. This is how markets work. So if that's the way markets work, you have to cost average. You can put everything down here only if you know it's not going to slip, which there is no guarantee till we start to see like it went up really hard. We trade this. So, wow, this is great. So I'm going to hold on. Oh, next thing you know, it's going straight down to the same level. Am I controlling this? No, the machines are. So every time you get hope, they're bringing it down. Every time you're feeling a little bit bad, boom, you don't sell, they're bringing it down. That's just the machines because they know how you guys feel, think, breathe, eat, and crap. How about that? Okay? So that's the reason of volatility. That's the reason why you always have to have some cash on the side. Doesn't matter what size account it is. And you need to basically not say, oh, I'm just going to buy here and hold all the way up here. You got to buy the tactical dips and sell the tactical highs. That's really what it is. And as you keep on doing this more and more with small amounts of money, getting 100% here, 200% there, 60% here, 80% here, your account starts to grow. Look, I have a bias on the longer term side that the Russell 2000 is about to break out in a big way. I've shown it on multiple charts. I'm not going to spend my evening explaining the same thing that I've written many times on the Twitter feed. It's up to you to go see it if you really want to make money. But that doesn't mean it can't do this. Most probably that is exactly what it's going to do. So if you freak out on every little candle, especially when there's no real breakdown, and I'm showing you the simple chart here. I've shown you more complicated charts on the RUT and the IWM on Thinkorswim, which is very clean the way it looks. So what I'm getting at is the larger your account is. So we got back. So these intraday fluctuations, generally speaking, are roughly 20 to 40% when it comes to, and this is the reality, okay? No lies. When it comes to SPX and RUT. Now the reason behind that is the SPX, the RUT, and the NQ options, which we don't trade, but I might start trading, which is the NASDAQ options, are tied in with the volatility indexes too. And they're very volatile. They are exactly like futures trading. Okay? And futures traders are very fast movers, right? They are literally monkeys on hot tin roofs with like a frigging flamethrower under their butt. Okay? They jump on every single thing. Currency traders are like that too. So in futures trading and trading the SPX and the RUT calls and puts are exactly the same. Lots of zigzag. Okay? So if you let's say, for example, putting $500,000 trading these things, a 20% drop, and this is very important, is a paper, at least a unrealized paper loss of $100,000. Yes or no? Come on, let's get some responses. Yes or no? Exactly. Now you tell me that you're ready to at least handle $100,000 type of volatility, unrealized loss, and still keep a pretty like normal head? I don't think so. I don't think so. I know big money, all right? And nobody gave me a silver spoon for it. I used to park my boss's car that I love saying back in the days, right? When I started on Wall Street. You cannot handle even a paper looking at your P&L going down $100,000 and keep a normal head. You will do like my great ACS student K-Bot said, panic, because these are volatility moves that you're playing. It's not just the indices. It's the same thing with the Teslas and the Googles and stuff like that. You know that. Now, if you're trading with, let's say, $1,000 in these things, you drop, papers, the 20% volatility, 20 to 40% volatility. I'm picking the 20%. How much are you dropping? 200. You think that's going to really mess your head up? I don't think so. This is called behavioral game theory, behavioral finance. If you're trading, putting in $10,000, okay, on SPX RUT trades, and it drops 20% because of these intraday volatility, and you're down 2K, are you really going to freak out? I need responses. Are you really going to freak out like if you did this? Or if you put 50,000 down on these things and you're down 20%, which is $10,000? Are you going to freak out if a $10,000 trade drops 20% because of intraday volatility and you're down $2,000 on it? I need responses, please. If you guys are still live. Mike, stop asking me these long-winded questions right now. Answer what I'm asking. So you would freak out on a $10,000 trade if you're down 2,000 on a regular intraday volatility. Is that what I'm hearing? Yeah, Mike, you stop so much that you never catch those 400% moves. That's not a good enough answer, and that is a completely wrong thing. So Mike would freak out. Okay, fine. Dan would freak out. Who else would really freak out because you're down 2K on a $10,000 trade for 15 minutes? Okay, I'm not going to waste my time waiting for answers. Bottom line is, you don't freak out that much. Okay, if you have $500,000 and you're down $100,000 for about 15 minutes, okay, because of this type of volatility intraday, you are going to mentally freak out. On a $10,000 trade, on a $2,000 trade, which is you're down $400, okay, which is 20%, which is a rough volatility moves intraday. On a 10,000 down 2,000, you don't freak out. Okay, I would have to stop at a point where the market should not go. Mike, you're really now making up stuff like, market should not go. You're obviously not understanding anything I'm explaining to you about the markets, because the markets should not go. What does should not go mean? The market shouldn't go here and then just take off like a rocket? You need a lot of work, my friend Mike, and I'm not going to spend that time and energy teaching you right now. You need a lot of work, kid. Okay? That's all I'm going to say. All right. So the bottom line is, when you're playing volatility, stop losses do not work. Period. You can buy, I've explained this before. You buy something here at 4, it's down here at 2. The tactical charts are showing that's a reversal move here. You got to basically buy more at these levels. Bring your cost down. Okay? So if you bring your cost down, 4 and 2, 6, your cost right now is 3. And then as you zoom forward, we do it every day, every week, you're selling it at 7 or 8. That's just the way it goes. Which brings me to a very, very important point. Okay? I'm starting to understand. Well, at least some of you guys are here. Okay. Some of you understand. If you are going to be options traders, you have to be risk traders. You have to quantify the risk based on what you see in front of you with the help of my charts. If you cannot risk, do not be an options trader. Buy my stocks. They work great. They work great. Buy 10 shares, buy 100 shares, buy 1,000 shares, whatever whatever your capacity is. But if you're going to be an options trader and you do not understand the force and the power of these charts that I'm putting in front of you, which is full of volatility, I don't create it. Do not be an options trader. You want to play Tesla, you better know how to manage your trades based on the levels that I show. You want to trade the S&P 500. I'm showing the consolidation channel. Lots of chop here. And then the hit right up there. Still will go higher. But I'm just letting you guys know. Risk needs to be your friend. And the only way you make risk your friend, you want real safety? What the heck are you doing trading options? Doing stop losses and this and that. Garbage. Unless there's a massive breakdown in the market, of course there's stop losses which matter. But are you going to get in at those tactical levels? I don't think so. Because your stop is going to go off right here. Let me just put this thing here and let me give you a real reality of what goes on. Your stop is going to go off right here at this major support. The market's going to dip and then move within, I would say, 15 seconds to 15 minutes. So you're telling me that you will get stopped out here and you will re-enter it most probably here, because by the time you get your head straight, here, and by that time, the market is basically ready to pull back again and then move sideways. I think a lot of you are living in la la land, or maybe you guys just are not trading in the real world. I don't have much to say. Okay. I don't have the perfect method. All I know is I'm a damn good driver when it comes to driving through these volatile markets, and my charts are damn clear. So if you want to be a swing trader, you buy these tactical double bottom reversals, triple bottom, and you say, you know what? It looks great because he's shown the consolidation channel, the bull flag. I'm going to hold it. And I have traders who do that, and they make a crap load of money. They do not care about this intraday 20, 30, 40% volatility. And it's the same story, which I'm going to show you next before I shut out this session, with the IWM, which at this point, this is one of my most classic charts that I have drawn in a while. This is made in USA. This is the Russell 2000. This is not fake hats made in China and called made in USA. This is the real deal. Hardworking Americans making stuff here, selling to the domestic for domestic consumption and for international consumption. A lot of Russell 2000 companies are not just selling to us. They're selling to the world. This is a macro chart that goes back, one second. And I've shown this, and I'm going to explain this. And if you guys can get half of what I'm saying, you're going to be very rich. And if you're not, what can I say? Stay where you are. This is powerful. This is 2015. Okay? This chart, this is a rising wedge. At this point, we are hitting the top end. Will it be a straight line move up? All the way from the 1440 all the way to 1530? Absolutely not. That's huge. That means you're going to make like what, 10,000% on your money? No, it's going to vacillate a little bit here, but everything that shows here, looking at the simple stochastics. Oh God, let me see. Looking at the simple stochastics, this is what they're saying. I am going to eat you alive if you are shorting me right now. Do not underestimate the U.S. Small Cap Growth Index, what I call the U.S. Small Cap Infantry. I used to say in StockTwits when I used to draw these charts way back. rising to the challenge. They're attacking Fallujah, which was one of the biggest heroic battles by the Marines. Two of my friends were there. Okay, and they won it. And our boys took a lot of fire, a lot of injuries, a lot of deaths. Not that many, but still. But we took those bastards out. This is the Battle of Fallujah. We are going to win the battle on the Russell 2000, making a frigging new high. And I've been saying this for weeks, if not months. And I'm not being a stupid like, oh, just wear your hat and say, make America great. This is the real deal. This is what makes America great. Okay? And this stochastic right here with a gaping mouth. Look at that. This is not just like a straight line coming down. This is just like at this point. We got to just go by what we see here. It's just powerful. We are not done yet. That's what it's telling us. And many of my other metrics are saying the same thing. That's why I kept on pushing the Russell 2000. That's why the Russell 2000 today delivered more than 300%. I mean, on the 1430 and the 1435s, delivered more than 200% or roughly around there overnight. And you can just keep on moving the strikes out. So I sold the 1430, 1435s, and I bought the 1440s. And this, to me, as a technician standpoint, is powerful. By the time it gets here, it's probably going to be, it's probably not going to be like right away, probably a few weeks. Remember, this is a longer term chart. But look at the pattern of this chart. This is nice. This is real nice. Every single moving average is rushing forward. This is the 20-day moving average is still creating support at 1390. We don't want it to go to 1390, but look at the yellow line here. That's the 5 SMA, which is the trader's friend. In this case, it's the 5-week SMA. Does this look like it wants to like kind of slither down yet? Nope. It's going to push it up a little bit more. I'm not saying it's going to go past that, but we could get to 1460, 1480. That's another 40 points from here. Guys, wake up time. By the time all said and done, it reaches 1600, probably early part of next year. Because that's a lot of move. For that to happen, banks have to wake up with a vengeance. Energy has to go berserk. Energy is definitely waking up right now. And I've told you before, the Saudis and Donald have a fix on oil, okay? Donald is best friends with the Saudi king, the young guy, the smart guy. They know what they're doing with oil. So this is very, very powerful. Stochastics are damn good, and the weekly, and this is as far as I can go here before I can change the dates. But this is a good looking chart. This is not just good looking, this is pretty damn good. On the shorter term basis, if we look at the hourly, what can I say? This is IWM. Same story. Slithering on the second channel with a possible breakout towards 145. And you're not going to make this big money if you're not positioned at this level. That's just the way it is. And of course, if anything really changes, I'll let you guys know. Okay. I'm pretty tired. I think I've covered a lot of things here. I'm not going to take any more questions unless somebody has a really important question. Oh, this is what I want to let you guys know. Sometime by the 1st and 2nd week of August, this market is going to top. All right? And those are from many of my internal indicators. Remember, my service is almost transparent. I share a lot of important stuff, try to teach people so they can basically walk on their own feet. Not like say, oh, I have a very clear method, like, it really works. Yeah, my method friggin' works a lot. But I try to teach it as much as I possible and not hide it. I used to be in services where they just said, oh, we know what we're doing. This is the thing. I'm showing it to you. It's not that hard. So the bottom line is that let me just show you the S&P. The bottom line is that sometime things are going to get a little hectic on the upside by the 1st week of August, and generally speaking, what is also the 1st week of August is the end of the earnings season. Okay. So after the euphoria about the earnings season, and some of you guys get a little bit too excited about things, well, it'll be the time we get a nice thump. Nice thump doesn't mean the end of the world. It just means that we get a 600 to 700 point drop. And I've mentioned this before. Now, if you sit here, twiddle your thumbs and say, oh, I'm going to short the market from now till then, well, good luck. This is a weekly chart. As you can clearly see here, same old type of story on what's going on. It peaked out. Right when you think it's all over, they're going to kill you. Okay, so it's a 3-candle move. I think we have a little bit more to go, probably 24. Well, at this point, 2,500 is literally, you can sniff it. Because what's 2,500? It's 27 points from here. So roughly how much is that on the Dow? Quick, please. 27 S&P points is roughly how much on the Dow? Yeah, Dan said 162. Is that correct? Like 150 to 162. So we can get a 150 to 162 point move? Of course we can. That will sort of solidify the top in the market. Mike mentioned a good point. He said vacation time in Europe, it really doesn't matter because Europe works on our frigging time. Okay, and more importantly, a lot of the new European leaders like Macron and stuff are making the French. We're a great bunch of people. I love France. I swear to God, it's an amazing place. I'm sure a lot of you have been there. Is they're working a heck of a lot more. Okay, so yes, Europe does go on vacation, and even I remember I used to say, like, even during the Greek crisis, they all went down to the Greek beaches and Santorini and Crete and all those places to lie around and just enjoy. So in the middle of the crisis, that's the Europeans, man. You gotta love them. 10 cents in their pocket, but they're wearing the most stylish clothes and sitting there having the nicest wine. Gotta love it. They know how to enjoy life. So anyway, that's all I gotta say. We're going higher. It's going to be choppy, just the way. Nothing new. I've covered that very cleanly. Do the earnings plays. I think most of my ERs work big time. Some of them will be flat, some of them down. Give you a small example before I go. I had 10 calls of CSX. Okay? Actually, I won't give you my trade. But let's say there's 10 calls to CSX went to 0. They went from they were at $1 and change, and they are at 25 cents or something like that. Okay? On the other side, I had I split my risk. So we have even today, AXP is down 87 cents, not a big deal. Qualcomm's down 47 cents. VMI that I recommended is up $6.20. Hawk Energy that I recommended, earnings is up almost $2. So the other one that I had, Expo. Okay. The calls went from $1.05 to, I'm going to give you an exact number. These were the July 21st, 60 calls. They went to 7. Now, if somebody tells me that they can buy $100 worth of this call, one contract, and make $700, and let's say you bought one contract here, you lost 144, and you made 700 here, that means you made $556 net, right? I'm right? Yeah. I don't know what you guys are doing. That's why I say buy one call. Get into the game. Nike calls on the ER that I recommended, but we're at $1.40. They went to $9 because Nike just exploded. That was what, 2 weeks ago? So if you buy a basket of these $1, $2 calls, you have to go nuts. Buy one. One! Okay? And you say, okay, I'm going to put $600 in 6 of these babies. Okay? I can assure you, given my track record with ER, 3 of them are just going to go through the roof. Well, one of them will really go through the roof, and one of them will be flat, and then one of them will be down, like down. Net, you're going to make money. Your 600 is probably going to be at least at 900, not at zero. On that note, have a great evening, guys. I hope you listened to everything that I said. I'm just trying to help. But remember, options trading is risk. You got to use your own conviction. The only way that you can ever trade these markets, regardless of what they tell you in any other service, is through tactical charts. Not hope, not luck, not some like, oh, I'm just going to buy here and hold it forever type of thing. Tactical charting. That's what I do. I do it the best. Real-time charts are available to you guys all day long. Try to look at it on a larger screen. Don't freak out on every red candle. Sign up for the advanced coaching session so you really get into the nitty-gritty of it. And I wish you guys all well, so you guys can all share in the prosperity that some members are doing. And don't get too happy with things. When you start getting too happy with a certain stock, it is almost inevitably go down. Have a great evening, and God bless you all, and God bless the USA. Thank you for listening.